Hello guys, welcome back to another video. In this video, we're going to talk about the important adjustments from the chapter Fundamentals of Partnership. This is like a quick revision and we'll cover very important points which I've seen students forgetting, missing out when they're doing the sums. First thing that we have to keep in mind is the rule when there is no partnership deed present, right? So first thing that you have to remember is the profit and loss is to be shared equally among the partners if there is no partnership deed. Then the partners are not entitled for any interest on capital invested in the firm if there is no agreement. Similarly, no interest on drawings will be charged on the amount withdrawn by the partners if there is no partnership deed, no agreement. Interest on loans which the partner has given to the firm, right? So on that partners will receive 6% per annum interest from the firm. That means the firm has to pay that. So that is one fixed thing. Even if there is no agreement, this is always there. Again, read the question carefully to understand this. Don't confuse this with interest on loan which the firm has given to the partner. If a loan has been given by the firm to the partner, and there is no agreement, in that case, the partner doesn't have to pay any interest on that loan to the firm, right? Don't confuse between these two. This talks about where the firm has taken a loan from the partner, then the firm has to give interest at the rate 6% per annum. Okay. The next one is about salary, commission, and remuneration. No entitlement to receive any of these in absence of a deed, and no new partner can be introduced into the firm without the recent written consent of all the existing partners. Let's talk about interest on capital. Very interesting, sometimes confusing as well. The first thing, interest on capital, as we all know, is calculated on time basis, taking into consideration any additional capital introduced or any existing capital withdrawn. Okay, if there is anything information given, then you have to consider that. Next one, interest on capital is always allowed at a fixed percentage on the opening capital balance. Now, this is important. Sometimes in the question, the amount of capital which is given to you is after all adjustments or at on the closing date. Be very careful to read the question here. Some of the questions are tricky. So you have to understand whether the capital balance given to you in the question is that the opening capital balance or the capital balance after all adjustments at the end. Okay. So if you don't have the opening capital balance, then you have to calculate to find the capital at the beginning of the year. So do a back calculation like closing capital plus any drawings minus additional capital minus profit, or if there's a loss, then add that to arrive at the opening capital. On this capital amount, you will have to calculate your interest on capital. Okay. Next one that we have, as per the tax rule, the maximum rate of interest that can be allowed on interest on capital is 12%. This cannot exceed that. So this is something can come as a trick question in your MCQs as well. Next one. Now interest on capital, again you have to read the question carefully to understand whether the interest on capital given to you is an appropriation of profit or is a charge against profit, because the rules are a little different for both of them. So now if the question says that interest on capital is allowed to the partners, okay, there is no compulsion, then it is an appropriation. And in that case, if there is sufficient profit, you provide full interest on capital. If there is insufficient profit, then the profit amount is distributed among the partners in the ratio of interest on capital. Okay, first you calculate the interest on capital, the actual one, you get the ratio, and then you distribute the profit amount in that ratio. Okay, and if there is a loss, then no interest on capital is provided if it is an appropriation. However, if the question says that interest on capital is a charge against profit, so in that case, if there is sufficient profit, you provide full interest on capital. If there is insufficient profit, then Also, you provide the full interest on capital, and the resulting loss that you get is distributed among the partners in their profit sharing ratio. And if there is a loss, then also you provide full interest on capital, and the resulting loss is distributed among the partners in their profit sharing ratio. Be careful, read the question is important. Journal entry for IOC. Now, again, there are MCQs on this where you are asked to pass the entry for provision or entry on closure. So, when you're providing interest on capital, entry is interest on capital account debit to partner's capital or current account. However, if you're closing the interest on capital, then it is debited to the profit and loss appropriation account. So, profit and loss appropriation account debit to interest on capital. Similarly, for salary and commission, partner salary and commission account debit to partner's capital or current account, and on closure, profit and loss appropriation account debit to partner salary or commission account. This is also debited to partner's profit and loss appropriation account. Okay, not to profit and loss account, don't get confused. Partner salary and commission are part of appropriation. Similarly, interest on drawings, this is an income to the firm. So that's why here partner's capital or current account is debited to interest on drawings, and interest on drawings is debited to profit and loss appropriation account, right? So on the in the profit and loss appropriation account, that's why you see that it appears on the credit side. We write by interest on drawings, right? So these are the journals you have to keep in mind and be very careful because there are MCQs on journals. In the ISC recently, a lot of focus is there on the journals. Coming to another interesting topic, interest on partner's loan. Now, if any partner has given a loan to the firm, he is entitled to receive interest on such loan at an agreed rate of interest. As I told you previously, that he is entitled to receive interest at the rate 6% per annum if there is no agreement. And if there is agreement, then at that rate. Similarly, interest on partner's loan. Interest on partner's loan is a charge against profit, and hence it is allowed even if there are no profits. Okay. However, interest on loan by the firm to a partner. So if the firm has given a loan to the partner, in that case, this is a gain to the firm and it is recorded on the credit side of PL account, profit and loss account again, not profit and loss appropriation account. Don't get confused. However, if there is no agreement regarding the rate of interest, the firm is not entitled to receive any interest on loan. Okay. Let's have a look at the journal entries. Now, this is very tricky. Be careful. Interest on partner's loan account debit to partner's loan account. Okay. So, interest on partner's loan, where partner has given a loan and is receiving interest on that. Okay. So, it's an expense for the firm. So, interest on partner's loan account is debited to partner's loan account, and that is debited to profit and loss account. So, profit and loss account debit to interest on partner's loan account. Okay. So here see no PL appropriation account is there, no partners capital or current account is here. Okay, these are passed through partners loan account, interest in partners loan account, and profit and loss account. Be very careful. Similarly, if there is a loan which is given to a partner, okay, firm has given a loan to the partner. In that case, partner's capital current account comes into picture. Okay, so partner's capital or current account debit to interest in partner's loan account, and that is credited to profit and loss account. See, interest on partner's own account debit to profit and loss account. So because it's an income to the firm, it is written on the credit side of profit and loss account. Okay, and in the partner's capital account, we write it on the debit side or current account if it is a fixed capital method. Similarly, for rent to a partner, now this is another tricky part. Rent account debit to partner's capital current account. It appears it is credited if a partner is entitled to receive a rent, then it is credited to partner's capital current account. We write it on the credit side. And however, it is debited to PL account, say profit and loss account debit to rent account. Rent again doesn't come in the PL appropriation account. Okay, so we have to do some adjustments. If you see rent, interest on loan to partner, or interest on loan from partner, so you have to prepare a PL account separately where you write the adjustments for rent, for interest on loan, partner's loan, whether given or taken, and then you arrive at the correct net profit after all adjustments. This is the profit which is transferred to PL appropriation account. Okay, so be very careful regarding these three adjustments, mainly rent, interest on loan. This is the loan interest which the firm is paying to the partner because firm has taken a loan, and this is the interest which the firm is receiving because firm has given a loan. In either of these cases, this is a pass through PL account, and then this is the amount you have to transfer to PL Appro to do further calculations of calculating your net profit, your share of profit, like after interest on capital, interest on drawings, partner salary, commission, general reserve, all those adjustments. And then in partner's capital account, just to understand this better, we have the rent appearing on the credit side by given to a partner, and this is the interest on partner's loan, where loan is the partner is paying the interest to the firm. Okay, so these were the topics that I wanted to cover with you for a quick revision. Hope this was helpful. If you liked it, do share with your friends, hit the like button, and stay tuned for more videos. Don't miss out any videos, hit the subscribe button so that you get notified whenever a new video is shared. We'll catch you all in the next video with another topic. Thanks for watching.